The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. What we're going to do this morning is take a look at the German DAX and then also the Ftse, like we always do. And then we're going to move over to the yellow metal, and we're going to talk about the gold a little bit here. So let's take a quick look at the Ftse and the DAX. You'll notice they're big, strong uptrends like what we've been here in the United States. And you'll be able to see here that several patterns are completing, but that doesn't mean they can't go any farther. The one thing that surprised me the most yesterday was the fact that the Dow Jones Transportation was so powerful. You have to respect that. That's serious money. You got to remember here, you're trading against these algo traders and the ETF groups and stuff like that. And once they get on a horse, they whip that puppy until it's off to the races. We want to know that. That's no question about that. Now, we had a question before we get to the gold is about the copper. And I wanted to bring that to your attention because we posted this Sunday night before the markets open. Hold on one second here before the markets open. And you'll notice that we had that 135 pattern. You'll see that the 5 was hit Sunday night at 417. We're now trading below $4, I believe. And that means that this pattern, you have lower highs, and that defines a bear market for what you're looking at. This is bullish, since February, but since the end of February and early March, it's in a bearish pattern. Now, the ABCD structure on this would take platinum would take copper down to 369. So that's what we're looking at right here. So there should be good support at 394 in the May copper, and then below that it would be at 369. So whether that has any effect on the stock market or not, folks, I really don't know. I don't follow the news hardly at all, and I don't watch the fundamentals at all. In fact, one of the questions someone asked me over last night was, why don't I look at the fundamentals? There's so many fundamentals, I can't understand them. And folks, my hardest years in education were the 3 years I spent in the 6th grade. So, some of this stuff is way over my head. When I hear, the Fed juice stuff and some of the other things, I know they work in there and I know they're good at it. But boy, I'll tell you, I just basically have trained myself to look at the bar chart and remind myself that they can hide from you, and they can cheat you, and they can give you fake information, whatever they want to do. But one thing they can't do is when they're buying, prices are going up, and when they're selling, prices are going down. Look at GameStop. Folks, that stock went all the way down to $38, and now it's $150. Now you tell me that's not some type of a move. I mean, that's because these people are in there pumping it, and you don't know when it's going to stop. The same thing happened in the dot-com bubble. If you'll remember that back in 2000, 99 and 2000, these stocks were going crazy. They would double or triple because someone called up inquiring whether they could buy something. I mean, you don't know what's going to happen. So that's it. Now, I wanted to move over to the gold market because we hit that number we've been waiting for, 1673, which is the 382 retracement on the long-term weekly chart. That was also a Gartley. We've now rallied exactly $36, I believe, right up to the 1713. So this is the key point right here, folks. We've went right up to the first harmonic number. What does that tell us? That yes, there's been a small bottom. Well, we don't know if it's a small bottom or not, but we just know that a bottom has been made in the gold market. But we also know that if it goes back below that level, that's not a good sign. So you've got to be able to put your stop in at break even down there and then see what's happening. Now, our official trade that we had for the services was the GLD, because I said that would be easier to do than any of the futures. So we hit, we closed at 157.49, and that your stop now should be under yesterday's low because it's going to have a pretty good rally today, given the fact that maybe it is, I don't know, but we have a really good rally going here in the gold market. So, but this is a key level here at this 17.13 because we need to get that thing above 17.18, 17.20, and then we'll see what it's really made of. So that's it. Okay. The second thing that someone asked me was about the Bitcoin. I know very little about Bitcoin, but let's get it up here and take a look at it. This is a chart going back over the last several months, and we'll get this up here. It's a 4-hour chart, and you'll see here that if you look at this closely, I didn't draw this in, but anybody that's listened to this show longer than 20 minutes knows that we watch ABCDs, and as you can see now, we have completed a Gartley here at $54,000. Did I say that right? $54,000? Are you kidding me? Shut the front door and raise the rent. But anyway, that is a perfect Gartley, and we'll see whether it's going to come down or not. But anything above 58,000 will take this market easily to 67,000 and beyond. And beyond, I mean, I have no idea. That's the bottom line. So I watch this stuff, not involved in the cryptos at all, but I do like to see that what's going on here. So keep those things in mind because those are the key ones today to watch. Number one is the price of the, hold on one second, is the price of the gold up here at 17.13. Also, we've had a little bit of life. There's been a paramedic coming into the bond market. And we've rallied 3 handles now from 155 up to 158. So this is going to be interesting now, just like we have in the gold. If it's going to be bullish, it's got to get above this 158.5 level, 158.16. Then the bottom in the bonds we know for sure is in. We know that it made the 61% retracement on the monthly chart down there at 155, 156. But we don't know where it's going to go from here. And nobody knows that, folks. That's the whole key. In fact, Mark Douglas is saying you really don't need to know in order to make money. And to stop and think about that, folks. I mean, you really don't need to know, especially if you're a technician and all you're looking is what the people are buying and selling. You know, if they're going up, more buyers, if they're going down, more sellers. And that's the whole key to, pattern recognition swing trading is to find those spots where you don't have to risk very much and see whether it's going to hold. Now, the Nasdaq is the leader of the pack today. It's been running, very, very strong, but it's not been an easy gig, that's for sure. Let's move on here to just a second here, and we'll see where we are here. I want to double check a couple things. There we go. Now we got this puppy running. Shut the front door and raise the rent, you gold bears. I don't know what's going to happen. We finally hit 17.17, folks. So now we're up $41 from the bottom. So that tells us that we are in a very, very interesting spot here to see where we're going to go next. And I want to do something quickly here because we have oh my goodness, just a second here, folks. I have to do something very, very important. Hold on just a minute here. We'll be right back.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. By the way, I forgot to mention that we have Arch Crawford as our guest today at the half hour. And tomorrow, with a little bit of luck, we're going to have Rich Anderson and also Cy Monley, if we can, tomorrow. So that'll be interesting. And of course, on the 11th, Thursday, we have Norm Winsky, who calls it to the minute from down there in Naples, Florida. All right, boys and girls, let's look at a couple of things here that may or may not be important. And I want to reiterate, just to give you an idea here, this is what I was looking at last night when we had the gold market. Just bring this up here for a second, because I'm walking through this, folks, because I watch how the market unfolds the best I can. But we had this really nice little Gartley there. You see that the 382 up there at 1688, and when I said that, maybe this is really bearish. So I said, raise your stop on April gold, to 1677. So what I would suggest here now, you see, we've gone off the top of this chart. We're already at 1717, so we moved quite a bit. So that tells us that the structure has changed. Now, you folks might find this hard to believe, but you know that this rally that we've had, this $41 rally, that's the best rally we've had in 9 days in gold. Now, that's a pretty substantial rally, so I think you got to pay close attention to that. Now, okay, this is my secret sauce for the day. If we can get gold above 1732 in the next 2 days, and that's the starting bell, folks, that means this puppy is going to go higher and a lot higher. So let's keep an eye on it. I still think we're going to make $3,000 an ounce. I don't know if it'll be this year or next year. I think it'll be this year, because if Bitcoin can go to 56,000 or 58,000, we can get gold to go to 3,000. Folks, it's nearly impossible to buy silver rounds, the little 1 ounce coins that the government mints. They're beautiful. They're with the eagle on the side and everything. I mean, they're just fabulous. But it's impossible to find 1 ounce bars. I mean, 1 ounce coins. It's really, really tough. Duffy's telling us that the GDX is up 3.4%. There's another one, because if you listen to the newsletter and my yelling and screaming here over the past couple of months here, that we were watching GDX as possible of a spot where the market might bottom. And there it is, folks. The last 6 months, look at the ABCDs. You don't have to know a lot about fundamentals if you follow that. And look what happens. We're going to be up 3%. So it's going to be up in the 33s trading today. So all you know now for sure is if that makes a new low, kaput, it's over. You know, these gold miners and gold's going to be in a bear market that's going to continue probably for at least another few months, I would guess. But if it can hold this level, and that's a big if, then you've got a chance for the market to have a heck of a run. So all I was doing with this was looking at the gold and silver miners index, and then I looked at the prices of gold with the technical stuff in the gold market, and I said, okay, if this thing's going to go up, these guys, they're the leader of the pack, so you got to see the producers. So this is what we're watching here. So that's another thing that you need to remind yourself is to look at the charts if you're a technician. And that's someone said Danny loaded the boat. Well, Danny, I want to give you some really serious advice, okay? It's much better to be on solid ground than to be out in a boat. So make sure that you have your stop working at all times. I'll tell you, folks, the times that I get in trouble is when I emotionally get tied in something that I think is going to go to A or to B, just like I did here with these things. No, I don't love boats, and the reason for that is the first time I ever took a cruise was down in the Mexican Riviera, and it was a typhoon, and it was the voyage from hell. Actually got my money back on it. It was so bad. Anyway, and of course going to Florida to see Tommy O'Brien with his fleet of yachts, and taking a boat over to the restaurant right on the water. And my gosh, it was a full moon, and the waves were coming over the bow, 6-8 foot waves there, the little inland outlet, and it was horrible. Actually, it was very quiet, but to me, it was 6 foot waves over the bow. Let's get back to the markets here. I don't want to spend any time with this. Just for information purposes, when I first started doing this stuff, you know, this I'm talking about 1959, 1960, and I got into college, and then I started college in 59. And so the first classes that I had were all science. And when I finally got in the third year, I started taking some business classes to go to other things. And a statistics class that I took, the guy bought and sold stocks. That's what he does. He was a young guy from Yale, and he was a really smart PhD. And he's the one that really got me interested in the silver market. But the thing that he told me the most is he had this parrot in his office, and he used the Wall Street Journal as the lining of the bottom of the parrot cage. And he said that was the only thing that he could find in that Wall Street Journal that was worthy enough, you know, to use. And that was use it as paper for bottom of a parrot's cage. And after years and years of looking at all these things, I have to believe it. Folks, I can't tell you the number of times that the emotional part of this is, and believe me, this was the early part of my career. When I saw the market start to run in 1972, I've only been in the markets 8, 9, 10 years, and I didn't know that, they could go straight up like that, but I was just buying cycle lows using the Hearst stuff and made a lot of money. The problem was I didn't know that when bear market started, they could last 8, 10, 12 months, and that's what happened. It went down into the October 1974 low. We made a double bottom in October and December, and then we started the big bottom that we're still in. And so I made probably the best trade that I did. The best trade that I did during that time was the losses that I took during October of 1974 and December of 1974, because then I had to study. I got interested in the Gartley book a little bit more, than I realized I didn't know very much, and then that's what turned it. So it was actually the worst trades that turned out to be, the best trade. So that's just what I'm watching. So let's pay attention to that, and that's how I got started. That's the girl that brought me to the dance, and that's the dance I dance with. I can't tell you any more about that. I don't know where the gold is going to go, but all I do know is if we get above 1735 in the next few hours, next day or so, that's going to be a great piece of information. We've already exceeded any rally over the last 9 days in gold. So that's a good sign that it can get above $41. So I hope that helps, but I'm not sure, whether it's going to help or not. Take a look at the natural gas today, folks. It's got a chance to make a bottom down here at this 263 level, but whether it will or not, I don't know, because there's a great deal of support hanging out at 259. So let's remind ourselves of that, too, as we're watching. How high did we get? Did we get to 17? When we got 17.18 in the gold, we're now at 17.12. And that was 877-927-6648.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Arch Crawford of Crawford Perspectives on the line. Are you in the house? Hi, Arch. How are you doing this morning?
Very well, thanks. Hope you are.
Hey, very good. Arch, you've been around a long time, actually longer than I have, and you happen to be 4 months older than me. So the question that I have for you, are we seeing any similarities to what happened in the dot-com bubble with some of the stuff we're seeing now, not only in stocks, but in the cryptocurrencies?
It looks similar to me. Another thing is that we have a new high in the Dow Jones, and none of the other major broader indexes are making a new high yet.
Yeah. How about that transportation index yesterday being up 300 points? I mean, that was an incredible move. My goodness, that just startled everybody, I think. Certainly startled me.
I agree.
Yeah. Oh, Arch, the question that someone's asked me, and I thought having you as a guest today would be helpful, and that is we had a pretty significant bottom in the gold yesterday, it looks like, down here just a little below the 1,700 level, and now we've rallied up to 1,718 today. Is there a bottom forming here in the gold market and also in silver?
I have an intermediate to longer-term trend line that it's been approaching the last 2 or 3 days. It has not quite gotten down to it, but the good thing is that it looks like a very solid line, and it should at least get a decent bounce off of it. Whether it will be the bottom or not is hard to say. I'm kind of hoping so, but it's not a good thing to live in hope in the stock market.
We've danced with that girl before, absolutely, for sure.
I would say gold is going to go a long ways eventually. I mean, it had a huge run recently and topped about a little above about 2,100, I think it was.
Yeah,
and not quite up to 2,100, but close. And now we've got the 50-day breaking below the 200-day about close to a month ago. So the technicals, I have to say, are negative except for the trend line, which looks like it may stop it at least for a while. But okay. I would say long term, I'm very positive on gold and very negative on just about everything else.
Do you see any really startling thing in the stock market? You mentioned about the rotation and stuff like that. Is there any one sector that you're watching that would, sort of trigger? That this looks like we're right, or how do you handle it when you have so much stuff going on in so many different areas in the stock market?
Well, I keep up with the different areas in the major indices, but I don't do much looking at individual stocks. I look at the dollar, I look at the oil, I look at the interest rate on the 10-year bond, I look at the gold, and I look at the QQQ, and none of those are acting near as well as the Dow Jones, which is a red flag signal to me.
Yeah, boy, that's only 30 stocks, and they're price weighted, so it's really not a good indication of what the market is. I mean, you can't take 30 stocks out of the 7,000 stocks that make up the markets. I mean, so
yeah. Well, the thing is that it's easier to manipulate. So the people that are really into these things with the really big money try to fool us with it.
Sometimes it's an easier task than they might think. Arch, do you follow any way to follow what the algo traders or these people that do the ETFs and stuff, where they Reddit and all these other things that are out there? Do you follow that at all? Because we had GameStop go from 450 down to 39.
What exactly?
Say again, please.
Yeah, I'm saying. Say again, please. What is the exact question?
I threw a bunch of them all in one sentence. Do you follow the Reddit group and also the algo traders, and see what they're doing each day?
No.
Okay, good. No, that's good enough. I can't either, because those are computer guys that I don't. I hear it in the news occasionally, but that's after the fact. So I just really stick with the indices and see how they are lining up, and that's pretty much what I do, much like you. But I happen to be very bullish the gold market right now, and I think we've got a slight chance of, having it to run. It's got to get above 1730, I believe, and then it's got a chance to maybe to accelerate a little bit. How about the crude oil market? Anything you're hearing over there from your friends over in the Far East?
Actually, I haven't checked with them. I just follow the chart, and the chart, you had that dip down to below 10. I think it was below 5 there on one day or something. And, and it came all the way back up, and it's been in the sideways pattern from like last June until this November. And it started a very steady and positive movement in November, and it's still going. So I have no qualms about it unless it starts breaking down through technical things, which it is not at this time.
Yeah. No, that's for sure. It's trading at, $64 a barrel. Boy, you never thought it would get that high, considering it was that contract was actually trading at around $9 when we went negative, to when that fellow from Singapore got into big trouble. Is there any parting words that you'd like to share with our listeners that to pay attention to in the next few weeks?
Well, I'm paying some attention to the seasonal patterns. And last year we had this fairly sharp drop into, I think, the 23rd of March. So I'm watchful of that. But we have to break some really long-term things to turn extremely negative. And I'm looking to be extremely negative because this thing has outrun everything of any kind of reason. and now we're getting those divergences.
Yeah, boy, that's the understatement of the year. Boy, I'll tell you, I see some of these things, and when that transportation index, I don't trade it. I just look at it, and I said, oh my goodness, that's huge pattern that when you get an index like that up 300 points. Hey, listen, I want to thank you for being on today, and maybe we'll have you on again sometime in April, maybe April 17th. Isn't that a key day, astrological, March?
It's my birthday.
I know you and what was his name? J.P. Morgan, was it?
J.P. Morgan, birthday? Me and J.P. Morgan, and Khrushchev too.
Oh well, boy, that's really in a. Hey, listen, join us. We'll talk to you later. Arts Profit, folks. Profit Perspective.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, and we made a high of, I believe, 18 in the gold. We needed to get above, for confirmation, folks, we needed to get above 1730 the next day or two. I don't think it'll be today, but we'll see if that, in fact, is going to mean anything. Now, I wanted to spend just a moment or two to talk about the euro, folks. We've had a really big pattern in the euro that is just about has completed here. Let's get it up here to draw it in here. Let's take a look at it. You'll see here that we were looking at it to get to about 186. We got down to the 1850, folks. I think the low was 1848 or something like that in the euro. And now we've come back above the 119 level. So I think we've made a pretty major bottom there. That has no correlation with the gold that I can tell. I've looked at this longer term, and I really don't see any correlation that you can, trade off of. So this is nothing more than an ABCD pattern. You can see here, if you look at this on the time period at March 3rd, when we were trading up there at 121, that was a head and shoulders pattern. You had the right shoulder much lower than the left shoulder, and that's a pretty good indication. We were also at the 50% level, and so that led to the spot that, we were looking down here to cover, which we did yesterday. Covered a little bit too soon, but that's I'm usually I don't want to miss the dance, so I usually get to the dance a little bit early before the orchestra starts. So right now we're waiting to see if we can get a confirmation buy here in the euro, because after a move like this, you usually get 2 or 3 points, and if you don't have to risk very much to get those 2 or 3 points, then you're going to be far better off. So let's just keep those things in mind here, because we've got a market that is, as Basil Chapman would tell you, it's bifurcated, because you got some things that go up and some things that go down. It just depends on, what you're looking at. So pay very close attention to this. Yesterday, they beat the heck out of the Nasdaq, and so today they have it on the smorgasbord plate to make it go up, and that's exactly what's been happening. So these are just things we're watching. I wanted to bring one stock to your attention, folks, because it's acting incredibly bearish. And I know it's a stock that everybody looks at. Most people have it in their portfolios if they belong to any of these hedge funds or, mutual funds and stuff like this. But look at Apple, folks. Since the end of January, when we hit 145, we broke 118, and it looks like there could be support down at 115. Now we're going to see, with all the Nasdaq running today, we'll see if this has got a little bit of a run here to the upside. But Apple is not looking very good. But this is the most widely held stock in the world, I believe. And and I know it used to be one of the most valuable, and it probably will be again someday, but we're down, well over 15% since the January high. So let's remind ourselves that what goes up can also come down. So that's a key thing to pay very close attention to. If you'll give me 1 second, folks, I need to catch up to what the markets are doing here. And having a pretty good rally here, there's what we would need to be looking at. Very, very good. That's what we like to see. We got the S&P trading at 38.65, holding us a pretty good area. We've got the gold is trading at 17.13, high's been 17.19, and we got the bonds trading at 157.27. A lot of resistance at 158.06 in the bonds, folks. Just a great deal of what we call resistance at that level. So tell ourselves that that's something to keep a close eye on. If the bonds get above that 159 level, that would be really, really quite bullish. It would solidify that the bottom that we made down there at 155 is spot on. So that's another thing. I write these numbers down because they're key levels to pay close attention to. So, all right, let's move on here. Talk about crude oil. We're trading around 64.65 right now. Last night we could not get above 66, which was a key level. The high we had made Sunday night was at 68. If you remember, that was a 3 drive to a top pattern. Everything lined up pretty nicely. And so if you can remind yourself of those numbers, that sometimes they work, sometimes they don't. But what they do is they tell you that you've got some things that are on your plate that you need to be watching. And that's the whole key to paying attention to these things as we look at them here this morning. All right, now I wanted to mention one other thing, and that is about the soybean market. We're trading about we've got 2 major reports. We got one of them today, comes out at 10 o'clock Central Time, and then we got another big world report coming out on Friday. So if you're going to do any trading, wait till after the report, unless you have a really strong indication that you're looking at something that is going to be very, very, in other words, you really believe that it's going to go one way or another if you go into report. Unless you have huge profits, I would never, ever recommend doing that. The only time you go into a major report is when you have such large profits that it doesn't really make any difference. I can remember the story that I was listening to Byron Tucker talking to Leo Melamed back in 1983 on the floor of the exchange there in Chicago, and Leo gave Byron an order, to buy a bunch of treasury bills, and Byron reminded him that we got that M2 coming out in just in about an hour, and Leo said it doesn't make any difference. He said the trend is up, and he was certainly right. And the report was very, very bearish, and the T-bills still took off like a rocket. So you've got to keep these things in mind as we look at these markets today. All right, let's stop and think for 1 second here that these people that have these algorithmic systems and stuff like that, you have to pay close attention to these folks, because they run the markets for a considerable time, and then after that, what happens is the markets will settle down. Yesterday the big thing they were running was the Dow Jones Transportation, and also the Dow Jones. The Dow Jones moved 900 points, folks, and the S&P hardly moved at all. Now the S&P is moving a little bit, but it hasn't caught up to 900 points in the Dow. So that's these things are different this time, and I don't know if it's because of the social media of pumping stocks, and I see it on Bloomberg. I keep Bloomberg on mute, but then they show me which of these things are moving, and that gives you an idea that once they started to come in and buy, and there's nothing illegal about that, folks. They just have an opinion on what the market's doing, and they take advantage of that opinion. That's really all that it's about. So I don't do any stock trading at all, but I watch what they're doing, and they're probably doing it in silver and some other things sometimes. I don't know. But it's not any different than what we had here at TFNN when people post, ideas or what they want to be buying and what they want to be selling. I mean, it's the same principle. You're just sharing information of what you're watching here. So I don't know who that is. Wow, someone's calling pretty early in the morning here. I don't know. Sorry if I can't turn the phone off, folks. It's too far away. So just bear with me, and we'll move on to something else the next time that the phone tries to ring. Okay, let's spend a little bit of time here on the gold, folks. The key thing to look at in gold is if the bottom is in, we're not going to take out 1674. That's it.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, just $89, exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, the phone call was from Jerome Bressert, Walt Bressert's son, who lives here in Tucson. The reason why I live here in Tucson is because back in the early 80s, mid-80s, I would come over here and visit Walt and Teresa. I believe Jerome and his brother were just little toddlers, 5, 6 years old, as I recall, and I would spend a couple of days with him, sometimes a little bit longer, and we would go over cycle stuff and stuff. We lost Walt several years ago in Las Vegas from Alzheimer's. He was very young to get it, but what a great guy he was. And he had Hal commodity cycles for many years, and it left us a lot of legacy stuff. And I'm sure that Jerome has got some really good stories to tell. And he's got a new service that's coming out, so we'll be able to talk to him hopefully this week, if not in the future. So we would like to have him on the show because he's been involved in the business ever since he was old enough to, eat Cheerios. So it'll be a lot of fun. The key things to take away, folks, do not let that gold, if you're long to gold, don't let it get below 1674. If it gets below there, something's wrong. This is just a one-day rally in a bear market. However, if we get above 1735 today or tomorrow, shut the front door and raise the rent, then we got to start looking to add to the position. And that's what my game plan is to try to find a place that after we've had a run is to add to the position. And much like we did on the short side, and that's what we're trying to do here, is to capitalize on something pretty exciting anyway. As far as the stock market, when the Dow Jones Transportation can do what it did yesterday, they can do anything they want, and they usually do. So remind ourselves that this is not a game of one-way Corrigans anymore. Any market that can give you 900 points can take it away from you. So remind yourself of that. Live every day in an attitude of gratitude, and may God bless. And folks, try to help your neighbors that here in the areas wherever you live, or even in the area where we live here. We have neighbors that are having a great deal of stress, unable to work, and some of them can't even go shopping anymore. So it's interesting to see different parts of the world. We'll see you all tomorrow, folks.